I'll be honest, I'm a bit of a deal junkie. So frankly, I would love to buy everything if I could. But frankly, it's all dependent on value. The side is I'm getting 20 to 50 deals a day to analyze. So all you have is your time. I have to quickly figure out, hey, does this property meet our profile for what we're looking to actually buy? Is this a motivated seller? And again, that is the number one question. Who is the seller? Why?
The pros definitely outdo the cons because people see you out there and that you're active and buying.
But I do think that the market will open up. I don't think that there were enough sellers.
Do you want to double down in New York? Because I think that some of these challenges that I've mentioned are priced in, and that's why you can get better yield in New York than say a Nashville or an Austin or a Miami. So the young guns in the office. I mean, they're kind of the new players on. Not everyone's on the same page now, where some people see threats and challenges, others see opportunity
underneath and seeing what's going on with the seller. Why are they selling? This dates back to my days at Mark's Millichap. It's never about the number. There's always a problem underneath that you're trying to solve as a broker, as James will attest, on the smaller building level to like 5 to 20 units, I would say. That's been my sweet spot. Not that that's exactly what I want to target, but that's just been my sweet spot and where the value has been. I think.
Good afternoon, and welcome to PincusCo Live, the weekly New York City commercial real estate broadcast. Thank you for joining us for our 4th episode. Today, we will take a look at the elite world of high-volume multifamily building buyers. It turns out there simply aren't that many of them. How do they source the deals, manage the pipeline, and integrate the new buildings in the existing portfolio? Both our guests are deeply involved in this business. One is a buyer and another is a broker. Sean Lefkovits co-founded Davean Holdings in 2017 and is responsible for all deal negotiations, raising capital both domestically and internationally, and overseeing investor relations. He was previously a broker with Marcus Millichap. Our second guest is James Nelson, principal and head of Avison Young's Tri-State Investment Sales Group, where he leads a team of 36 professionals in the sale of multifamily, office, development, and retail properties throughout the country. I'm Adam Pincus, founder of the 3-year-old media and publishing company PincusCo Media. We publish newsletters on transactions and new development, which are populated using our proprietary data, which we offer for sale. Before we start, I'd like to let you know about our upcoming shows. Next week, we will take a close look at Gowanus, including land pricing, available sites, the depth of the buyer pool, and more, with 2 insiders, developer Sam Charney of Charney Companies, which has several projects there, and broker Dan Marks of Terrace CRG, who's done multiple sales and has additional property listings. The following week, we will take a look at housing rights initiatives, legal successes and setbacks, and what they mean for the multifamily business and tenants. Now for a quick look at the numbers. We pulled at PincusCo the information from for these sales, and at the top we've bucketed them in the volume of buyers. Greenbrook Partners is kind of off by itself. Denali and Chestnut are focusing on similar assets. Townhouse Rental, I don't know exactly who is behind that, has a very similar buying strategy as Greenbrook, which is basically walk-ups in Brooklyn. Davean Holdings, and I'll let Sean discuss what he's doing. Let me get back to that. So Sean, thanks. I want to ask you a very specific question, and then you can get on and be a little more open with this. But I'd like to ask, when you're looking at strategy for an upcoming year, do you plan ahead targeting by the number of deals you want to do, by dollars, or is it opportunity based?
First of all, thanks for having me, Adam. James, always a pleasure to be on stage with you and to be with you guys. You have a very soothing voice, by the way. This is good for being a moderator. So your question is, do I plan ahead as far as how many deals I want to buy? I'll be honest, I'm a bit of a deal junkie. So frankly, I would love to buy everything if I could. But frankly, it's all dependent on value. I've seen throughout the last couple of years, different pockets of value opening up, and typically that's where I target. As far as what I do, I stick to my strengths. I stick to multifamily investing, multifamily mixed use. It's been my background for the last 15 years. As you mentioned, I started at Marcus & Millichap as a broker, one of the top multifamily teams in Manhattan. So that's literally all I did for about 7 years. We did about 200 deals when I was a broker there. So I look at, James has obviously brought me a few deals, but really it's all about where's the value in any given moment. I know we only have 29 minutes. I can keep going and give my philosophy, or
here, let's bounce back and forth with that.
Yeah.
But just let me turn to James for a minute. With these high volume buyers, and some of them are clients of yours, and some probably not, but do you target, and there's obviously more out there that are kind of waiting in the wings or have bought in the past, do you target them with different strategies?
So Adam, I want to start by thanking you also for bringing us on, and just for all the incredible data that you provide, which gives us a lot of the insight to make some of these decisions and bring some things online. So thank you for all the hard work. And yeah, it's to kind of take a step back, and I love the topic of the high frequency buyers. And what would be really interesting, Adam, is if you did that same chart from 5 or even 10 years ago, because I would guess, and by the way, many of the people who are on your chart today are actually in the audience watching this. So, they're out there, they're active, and, we call them the young guns in the office. I mean, they're kind of the new players on the street. And not that, Sean's obviously been doing this for years and before in the capacity as a broker, but going back, if you did this list 10 years ago, I think you'd see virtually no overlap. And look, post-COVID, the world changed. It was, the New York market was turned on its head. And, I've been doing this close to 25 years. And I would say, at least for the first 20 years, most of our clients would say, I'm proud, I own everything that I have here in New York, I'm holding forever. And I think, this pandemic really, gave some investors some pause, certainly what's going on up in Albany. And I know you've done some shows in the past on that, so I don't want to revisit that. But the point is that not everyone's on the same page now, and where some people see threats and challenges, others see opportunity, like Sean. So I think what we're witnessing right now is an incredible buying opportunity, because you have some of these long-term owners who, for at least the majority of my career, said, I'm never going to sell ever. And now maybe they're thinking, well, hey, maybe I shouldn't have my whole portfolio in New York. Maybe I should diversify. Maybe I should go buy down in the Southeast as well. And that is, bringing some pretty incredible opportunities to the forefront.
How do you find them? Like, how do you find the people who want to move on from the city, want to sell? Both of you, I guess, James, but then Sean, if you could speak to that.
I mean, I think it starts with information and educating. I mean, there's, and Sean remembers this from his days of broker. I mean, there's a lot of competitors, a lot of brokers who just canvas and they call, owner after owner up and down the block. Hey, do you want to sell? No, click. Do you want to sell? No, click. And they just keep going. And if you make enough of those calls, sure, maybe you'll finally find an owner who says, sure, I'll sell. I think we take a much longer term approach, really cultivating these relationships, but also advising owners and letting them know what's going on. And whether you're a buyer or seller, you need to know what's going on up in Albany about good cause eviction, because that's one of the considerations. And I'm sure it's playing into your investment thesis if you're buying or if you're selling. And so we lead with the information, we lead with the facts. So we're reaching out to owners, we're reaching out with content. And then based on that, having conversations, okay, well, this is what the landscape's looking like. Do you want to double down in New York? Because I think that some of these challenges that I've mentioned are priced in, and that's why you can get better yield in New York than, say, a Nashville or an Austin or a Miami. So we're out there to inform and let people know what's going on, and then to have informed discussions with them to help advise them on what's the best thing to do with their portfolio, whether it's to diversify here or to double down.
And Sean, looking at the idea of how do you approach, say, a deal that's not brought by a broker where you're already involved with somebody, how do you try to get a seller to sell?
So it's actually reverse. It's actually not getting a seller to sell. So when I get a deal from any broker, whether it's a listing broker or an off-market deal, I'll just run you through my process. Really, and James can attest to, is all you have is your time. We're not paid on salaries. We're paid basically on commission, and you eat what you kill. So all you have is your time. So the first question I look at or I analyze is this seller real? One factor, one way you look at that, of course, is the price. But really, the key is really digging underneath and seeing what's going on with the seller. Why are they selling? This dates back to my days at Mark's Millichap. It's never about the number. There's always a problem underneath that you're trying to solve as a broker, as James will attest. But as a buyer, I'm also trying to understand what's the real reason that the seller is selling. And it's never about the number. And if you can figure that part out, typically I love to meet with the owners, especially if I'm getting close in the deal. I look at them eye to eye, see what's going on. Are they a good person I want to get into business with or into contract with? And vice versa, I want to reciprocate that. So that's been one of my edges. Is I typically like to get to know, and I want to understand the reputation of who the seller is.
Adam, if I could just tack onto this, because this is such an important point, and you would be shocked how rare it is that an investor asks me, James, why is your client selling? What's the motivation? And look, sometimes as brokers, we need to keep that information confidential, but we can kind of give at least a profile of who we're working with, what the story is. So, because as Sean says, you don't want to waste your time chasing situations which aren't real. So, if you look at the scale of who is most motivated to sell and who is the least motivated, least motivated would be your discretionary seller, and there's plenty of brokers who call up an owner and say, hey, if I could get you 50 million, would you sell? Sure. And maybe the property is only worth 30 million. Well, you're wasting your time. Whereas an estate where, you have a passing of maybe the patriarch of the family, the real estate operator, you've got the kids who do not have the ability to handle it. They don't want to handle it. They have an estate tax looming. Those are the situations where you can see those types of properties trade at whatever the market clearing price in a very defined time frame. And Sean, I hope you don't mind me sharing this story, and stop me if you want me to. But
get in there. Sure,
one of the sales that we connected on last year, 103, 105 McDougal Street, we were representing an estate. And when we brought this to market, it was before COVID, only a couple months before. We had interest, in the low $30 million range. We were preparing to send out contracts. That was probably late February, early March. COVID hits, and think back to March, April, May of 2020. I mean, it was a really scary time. We didn't know if we were going to be in this forever. What would the market look like? Would it ever come back? And look, the estate needed to do something, and we reached out, and Sean stayed on this, and within a period of I would say 60, 90 days, we went from having a contract out at 32 million to Sean stepping up and contract closing, meaning that he just showed up to the table and said, we will close for, Sean, it was 22 and a quarter or 22 and a half.
Yeah, no, the memory, yeah. There you go.
But the point is, Adam, if we were not dealing with an estate who was very motivated that had to do something, I highly doubt they would have dropped $10 million in price to sell that, right? Because if you were a discretionary seller, you would have said, you know what, I'm going to take a step back. Let's wait a year or two. Let's see if this thing rebounds. And look, maybe they would have been right, or God forbid if it went the other way. But that's the point, is because of the motivation. That's why we were able to transact at that market clearing price.
And James, just tag on to that. What was the problem there? The problem there was time. So they needed to sell this immediately, which is, listen, it was a time when there was very few buyers, and I'm sure, everyone's saying the world's collapsing. But that was a solution that I talked to my partner, David, and we said, listen, this is an A+ asset. Long-term, this is going to be unbelievable. We can solve this problem here for the seller. We're going to get a discount because we can solve the time problem. We had the cash ready to go to close on it. So we literally did a same-day contract close.
So I want to move on to look at it's an interesting case. And I guess at some point we can kind of do deep dives into some of these. I mean, the big chunk discount is sort of an interesting concept. But right now, so we're looking at the high volume, and from Sean, your perspective, is there an advantage to being in the scene, sort of a high volume buyer? Do you see more stuff, or does it get kind of messy?
100%. And I would tell most of my investors, and my team knows as well, and that's why we've been ramping up on the hiring. We're probably the first call for most of these brokers, whether on market or off market brokers. And a lot of that is because of the reputation that I've carved for myself over the last couple of years as being a capable buyer, someone who doesn't retrade, someone who's very smooth in closing. And if you're a broker, like, who else would you rather deal with? Would you rather deal with someone that's going to retrade and potentially make you look bad as a broker? Then the seller's never going to want to sell it to you again. So that's my reputation that I like to live by. And because of that, I will get first crack at most of these properties. And being high volume, people know that I'm capable of closing.
Is there a downside? I mean, you're just dealing with all these, like, all the balls in the air. Like, how does that?
So again, this is kind of like all one theme. The downside is I'm getting 20 to 50 deals a day to analyze. So all you have is your time. I have to quickly figure out, hey, does this property meet our profile for what we're looking to actually buy? Is this a motivated seller? And again, that is the number one question. Who is the seller? Why are they selling? I know James is saying, like, no one asks you that question. That's my first question. Why are they selling? I need to know, like, what's the real reason why. Sometimes I won't get it, but we'll figure out later in the process if they're motivated or not. So the downside is, yes, we see a lot of deals, but it's sifting through and seeing which are the ones that are real, and that's what I like to focus on.
And James, I want to ask about, like, the different types of buyers that buy, like, a lot of stuff. Even looking historically back, like, we know A&E buys a lot of stuff, and they've bought it in the past, and they're going to buy a lot of stuff, and it's a bigger list than these 10. But do you go with different pricing to them?
No, I mean, when we're retained by the seller, our job is to maximize the exposure. So go out to the entire marketplace, and 9 times out of 10, there's going to be an asking price. So that's the number we're going for. And, everyone gets the same pricing guidance. I think where what Sean was saying really comes into play with the credibility of the buyer is when you have someone who you have transacted with multiple times, it's that much easier to really convey that to the seller that, look, this group is a proven entity. They say what they do what they say. Because reputation is everything. Like, even in a big market like New York, you retrade a seller or you break a contract, word gets around. So, but yeah, no, we certainly, if we're doing our job properly as the broker, we need to be out there broad. We need to be finding new sources of capital, certainly foreign capital and new domestic capital coming here as well. Always tracking who are the most active 1031 buyers in the marketplace. But especially for these types of multifamily assets, we see time and time again the same groups of competitors that show up, and they might have a different angle or perspective that might help them get a little more aggressive. But Adam, I want to make one more point that I think will be really helpful to the listeners here, and I want to compliment Sean and Davean, and what they do is they have an incredible presence in the market as well. So they are very active, and whether it's social media or putting out information on their transactions. And for brokers, that's brokers by definition need to be great marketers and need to be out there. But I think, going back years ago and thinking some of these long-term operators, there was this mentality where, hey, I want to go below the radar. I don't want anyone to know who I am. I'm very private. I don't want people to know that I'm buying properties, right? And not that, Sean's a boastful person saying, hey, look, everybody, this is what we're buying. But look, brokers can't understand what to offer unless if we kind of see what you're up to. And if you're presenting, these are our recent acquisitions. This is what we're doing with properties. This is what we're looking for. It's a constant reminder. And again, you got a couple other attendees in the audience who are doing the same thing and really differentiating themselves. So, look, there's pros and cons to both, and kind of putting your name out there. And, Sean, I don't know if you ever, tenant groups or whatever might see what you're doing and saying, hey, causing you some hassle. But I think, the pros definitely outdo the cons because people see you out there and that you're active and buying.
From sort of the reverse, the inside side is the investors in New York City real estate, the private equity firms and stuff like that, that often need to partner with these high volume companies like yourself and Greenbrook. How deep is the pool for that? Like, are there more private equity firms or investors that are coming to you guys, to Davean, to give you money, or like, how does it work?
Yeah, for sure. I mean, I think if you asked me this question 2 years ago, the answer would have been, no one is looking to park money in New York City. But, now that New York is kind of, or COVID, I should say, is in a rear view mirror, hopefully. We have a new mayor who's giving us a breath of fresh air, is saying all the right things, and is giving a lot of confidence to the city. I'm seeing my rents rising rapidly. I'm beating all of my projections. I mean, everyone wants to be back in New York City. So I think that's not just a domestic philosophy or feeling. I think it's also an international feeling. Besides, we have a couple of institutions right now that we do a lot of business with. We have a major lender with $500 billion under management that's given us a massive loan on a lot of our properties. But we also I have international capital, Canadian capital, I have South American capital, I have Israeli capital. I even have 1031 exchange money coming to me saying, hey, help me place my money, because they know that I'm in the forefront of deals. And also they know that I will execute, and I'm very transparent and honest with them. Friends and family have stuck with me from day one. So they're always typically in and recycling on every deal. So right now there's really a flurry of capital that's come to us. And I'll tell you, our problem is we're not seeing enough deal flow, or at least reasonably priced deal flow compared to what I did see about a year ago or 2 years ago.
Is that partly, you're to blame? Like it's putting pressure on the market and it's driving prices up. And now what do you do?
I mean, I don't know if I blame myself on that.
I blame yourself.
I'm sticking to my lane, but really right now there's more competition. But I do think that the market will open up. I don't think that there were enough sellers over the last 1 or 2 years. I think there's a lot of pent up holding. People didn't want to sell for what they considered below market, especially when COVID was rumbling around. So that gave the perception of negative pricing. So I do think the market's going to open up, especially on the larger assets, which is what I'm getting ready for to target and buy.
And James,
Adam, I was just going to say, I mean, historically, the number of sales are still far, far off. So, I mean, if you look at last year, annualizing New York City sales, our total figure was about $15 billion. That's across all asset classes, $5 million and greater. The 10-year average is $35 billion. And if you think back to 2015, which was peak of the market, that was $68 billion. So there's still, a very depressed amount of activity, but there's also been a huge upswing. I think there's a lot of pent up demand. And when there's uncertainty in the market, certainly 2020, even going into early 2021, sellers are on the sidelines because most of them who can wait will wait. Buyers don't want to catch the falling knife, so they're waiting. And then finally, we got to the point where, people were back and starting to get back into the office, and the fourth quarter was a huge quarter. There was triple the amount of dollar volume that traded in Manhattan compared to the trailing 4 quarters. In Brooklyn, it was 4 times. And so we've seen a lot of this pent up demand. And so I think it's going to be very active, and we're kind of in a pocket right now where there's still very attractive financing, although we're watching what happens there, because there's certainly going to be some rate hikes in the future. But right now, sellers feel confident that they can transact in this market, and buyers, and Sean is a great testament, are stepping up to the plate.
Where is pricing? Because that seems that's one of the elements to get somebody to want to sell. if more people rush into the market and they say, okay, we're achieving these prices, does that then bring it down again? Like what's the whole flow of that?
Yeah,
Well,
it's
I
just
mean, yeah, go ahead, Sean.
no, you're more of an economist than I. But quickly say that it's just a function of demand and supply. I think demand right now is outweighing the supply. I think soon that's going to change, but you have to pick your pockets, and that's what I've been doing. I've not, right now I have a few buildings under contract, but it's not as many as last year. So I'm really picking my pockets as far as what I'm buying.
Yeah, there's so many factors that play into what a cap rate is. So obviously location, tenancy, perceived upside. And I think what you've seen here is New York was really the value play, right? Because you had all this flight capital last year, and part of that was COVID, but part of it was also in response to the regulatory environment. So suddenly you have all these New York-based investors who are looking to buy down in the Southeast. You go to Nashville or Austin, it's a 3 cap. And meanwhile, we're here in the mid 4 cap range. So, suddenly we're the contrarian play that,
Yep.
and you when you go out and borrow money, you're getting the same rate, whether it's down the Southeast here or in New York. So, you had a much better spread here to make a positive cash on cash return. And, so some of these things like the regulatory challenges, I think are priced in. And that's why New York has been a better yield as of late.
A question on a different, on looking at people who wanted to sell large portfolios of properties. What's the appetite for people to come to market with that? And then will they be sold in chunks, or do you think someone will like take down big portfolios?
It really depends. It depends if you have very similar assets that are located, in close proximity. Yes, portfolio sales make a lot of sense. There's economies of scale to operate multiple properties at once. You can also, there's larger capital providers who have cheaper sources of capital, which can help. But if the portfolio is diversified, and whether that's through geography or different tenancy, for example, if you have a building that's fully fair market versus one that even has a couple rent regulated units, if you put those buildings together and said you have to buy them both, there's plenty of investors out there who say, look, I'm not touching a building with rent regulation right now. So, we usually on these portfolio sales, unless if it's, we handled a 12 building sale on the Upper East Side that was an estate sale, and that had to go all at once. But, if it's a private owner has the ability to transact either as a package or individually, we usually, especially if the assets are a little different, we put them out either or. So we can get pricing on the buildings individually as well as a package, and let the market speak for itself.
And Sean, do you think, is there a maximum number of buildings that you could own? Like, do you guys, is it like we want to like 25,000, or do you want to stay under 200 or?
No, I wouldn't say it's a number of buildings, honestly. I mean, we're, like
units.
I said before, we're hiring more and more. The value that I found over the last year and a half, it's actually been on the smaller building level to like 5 to 20 units, I would say. That's been my sweet spot. Not that that's exactly what I want to target, but that's just been my sweet spot and where the value has been.
Mm-hmm.
I think I mentioned a few minutes ago, I would like to typically target the larger assets. It's funny that the larger the building, and or a large building and a small building, 50 units and 10 units, can actually eat up the same amount of time. So I am trying to be cautious of that, but I'm just taking what the market's giving me. But no, like I said before, a deal junkie, we can keep hiring, we can handle it all. But I'm really taking what the market's giving me.
Would you go, I mean, like Black Spruce, just but like an extremely large building from JDS, would you go, like, what are you thinking when you say larger?
Yeah. We're looking at right now properties, $150 million portfolio. We're looking at another one in the high $60 million range. We looked at a couple others that just recently traded also in the $60 million range a few months ago. But I would say up to about $200 million. Yeah, and we have institutional capital, so it's really not an issue. One especially that we have a great track record with, great partnership, and we can really keep going. But it's we're waiting to see what the market can give us. I'm not just buying recklessly.
And James, just looking forward, like how do you see the rest of this year unrolling?
I think we have so much momentum from the end of last year. And again, the city's coming back to life, as Sean said. I think most people are excited with our new leadership in Mayor Adams. And the return to office is a really big thing. And it's happening with the banks coming back, and even Google and Facebook and Apple asking their employees to come back, even if on a hybrid basis. But the fact is, whether they're physically in the office or not, the people are here, right? And I think that's really that's can be demonstrated by the rental numbers. I mean, the rents in many cases are higher than they were
Rents are
pre-COVID.
flying. Rents are literally flying right now.
Yeah, so people want to live here, and that's the best case to make for New York. And I think just we talk about how New York stacks up against the Southeast. I mean, you go to some of these cities and you don't have the labor force. You don't have the people who are there and willing to work and rent apartments. And so I think there's a lot of appetite here. I was very encouraged by Google's decision to buy St. John's for over $2 billion. I mean, that was a major vote of confidence here for New York. And I'm really positive about the future as things continue to improve day by day.
Right. Well, I want to thank you both for joining us today. This concludes the broadcast. We're going to publish this program on our YouTube channel. Everyone's going to get a link to that. It'll include a 1-minute highlight reel. And I want to thank everyone for joining us. Thanks so much.
Thanks, Adam. Good to see you, Sean.
Yeah, likewise.
Thank you.